All right, let's dive right in. I've got a question for you, and it sounds kind of like a riddle, but the answer, it's basically the blueprint for our entire global financial system. The question is this: who does the world really owe money to? So, our story kicks off with a number that is, well, it's just about impossible to wrap your head around. $315 trillion. Yeah, that's not just government debt. That's the total debt of every single government, every corporation, and every person on the planet, all mashed together into one absolutely staggering figure. Okay, let's try to bring that massive number down to earth a little bit. Over 38 trillion of that belongs to just one country, the United States. That's the US national debt, and it's ticking up literally every single second. And when you start thinking about numbers this big, it leads you to a really strange, kind of paradoxical question. I mean, think about it. If every country is in debt, who are they all in debt to? Who's on the other side of this gigantic IOU? It feels like it shouldn't be possible, right? It almost defies logic. And that is the central mystery we're going to unravel today. Now, according to the source material we're looking at, this whole situation isn't some accident. And it's not a conspiracy theory. It's the result of a system that was designed this way, piece by piece, over centuries. The source points to a paper trail, a trail that goes back over 300 years, and that's exactly where our investigation begins. We're going all the way back to 1694. Now, you might be thinking, what's so special about 1694? Well, according to our source, this is the year that completely changed the game. It changed the relationship between governments and money forever. So picture this. England is flat broke. They've just been through a long, expensive war with France. Then this banker, a guy named William Paterson, comes along with this wild, revolutionary idea. He proposes a loan to the government, but here's the kicker. It would never be paid back. Instead, the government would just pay interest on it, forever. And just like that, with that one single deal, the Bank of England was born. You really can't overstate what a huge shift this was. I mean, before 1694, it was simple. Governments pretty much created their own money. Debt, that was a temporary thing, for emergencies. But after this deal, the whole model got flipped on its head. Suddenly, governments were borrowing from private lenders, and debt wasn't an emergency anymore. It became a permanent part of how the government worked. And there you have it, the birth of what we now call sovereign debt. And here's the central argument from our source material. This whole system, from day one, was never designed for the debt to actually be paid off. Nope, the goal was to create a permanent link, a forever stream of interest payments from the government to private finance. So that idea back in 1694, that was just the blueprint, right? The rough sketch. Over the next couple of hundred years, that sketch was refined, perfected, and built into the powerful global machine we see today. You can kind of see it evolve in these key stages. First, you've got the Bank of England. Then, the next big leap forward comes in the early 1800s with the invention of the modern bond market. And then, a huge moment in 1913, the creation of the U.S. Federal Reserve. Each step was like an upgrade, refining the machine. So, according to the source, the next major breakthrough came from a financier named Nathan Rothschild. He had this critical aha moment. He realized, hey, wait a minute. Governments aren't actually paying off their debts. What they're doing is, when a loan is due, they just take out a new loan to pay off the old one. They're just rolling it over again and again and again, forever. And based on that one simple insight, he built a whole system of financial tools that turned this rollover process from a gamble into a predictable science. He created things like international bond syndicates and secondary markets. Basically, he wove government bonds so deeply into the fabric of the financial system that the idea of a government defaulting became, well, unthinkable. It would crush everything. All right, so then we get to the American piece of the puzzle. The source talks about this secret meeting back in 1910 on a place called Jekyll Island. And the claim is that some of the world's wealthiest and most powerful men got together to design a central bank for the U.S. And what was the goal? To create a lender of last resort, basically a system that would allow the government to borrow almost unlimited amounts of money. And what came out of that meeting? The Federal Reserve. Okay, so the architecture is now in place in the world's biggest economies. What's the next step? Well, the next phase was to take this system and export it to the rest of the world. A huge turning point, according to the source, happened in the 1980s. See, back in the US, the Federal Reserve was trying to fight inflation, so they jacked up interest rates, like way up. This became known as the Volcker shock, and while it was meant for the US, it sent these massive shockwaves around the globe. It triggered a huge debt crisis for developing nations who had borrowed in US dollars. All of a sudden, their loan payments became completely unaffordable. So who comes to the rescue? The IMF steps in with these quote-unquote rescue packages. But there were strings attached. Big strings. They were called structural adjustment programs. And the source argues that these programs basically forced countries to adopt policies that locked them into these inescapable cycles of debt. I mean, some of these nations are still paying interest on loans they took out over 40 years ago. And all of this, it brings us right back to today. And back to our original question. In this giant, permanent, global system of debt, who's actually getting paid? Who is on the receiving end of all these interest payments? Let's zoom back in on the US for a second. Every single year, American taxpayers pay about $1 trillion. And that's not to pay down the debt. Nope. That's just the interest payment. It's just servicing the loan. That is $1 trillion flowing from the pockets of taxpayers directly to the people and institutions who own U.S. government bonds. Okay, but let's play a little thought experiment here. What if the United States could just wave a magic wand and poof, the entire national debt is gone tomorrow? What would actually happen? Well, according to the source, the answer is probably not what you're thinking. And this is where we get to the most mind-bending, almost unbelievable part of this whole system. The source claims that if the U.S. paid off all its debt, the money supply itself would pretty much vanish. How on earth is that even possible? Okay, here's how it works. In a nutshell. Step 1, the government needs money, so it issues bonds. A bond is just an IOU, right? It's debt. Step 2, the Federal Reserve comes along and buys those bonds. And in the process of buying them, it creates new dollars out of thin air, electronically. So get this. In our system, new money is literally created from new debt. They are two sides of the same coin. So if you erase the debt, you also erase the money that was created from that debt. The system actually requires permanent debt just to exist. So here we are, full circle. We've walked through how this whole system was designed, piece by piece, and we've seen how it works today. Now it's time to finally answer that first question. Who are the lenders? Who actually owns all $315 trillion of the world's debt? The answer? It's not some single, shadowy group in a secret room. It's a huge, global ecosystem of creditors. We're talking about the central banks of other countries, for sure. But we're also talking about the pension fund that your retirement depends on, the insurance company that covers your car, huge university endowments, powerful institutional investors. In short, the world owes money to the very pillars of the global financial system itself. The source material we've been looking at leaves us with this one powerful thought. The argument is that this system of permanent debt, it isn't broken. Not at all. It's working exactly as it was designed to. It's a system where debt isn't a problem that needs to be solved. It's the engine. It's the very thing that makes the whole global economy run. And once you see that pattern, you can never really unsee it.